from the president's first term. So what's the likelihood that will change, and for the better? Brian Hamilton is the CEO of Sageworks. This is a firm that provides research specifically on private companies. Brian, it's great to have you back on the show. At first glance, your initial survey results here, do you think this year will be better than last in terms of business practices, hiring, all the things that matter to us?
You know, really, it's very hard to say because for the past 4 years, these companies are growing. The margins are good, profits are good, but they're not hiring. And really, the last time this occurred was in the 1930s, so it's really amazing. It's very hard to say.
But didn't small business, private business get some level of clarity thanks to the fiscal cliff deal?
Well, sort of, but you really have to look at that in context. We are sitting at a $16 trillion debt, and business people know this. They're very sophisticated. They know what debt's all about. The country is not able to handle its debt. So that's a big cloud that's sitting over the country, and I think all these private companies, 27 million of them, know about that.
So if you move past this next fight, whenever it will be, over raising the debt ceiling, and we just heard from the president, obviously, this morning saying that this is an important issue, but we're not going to sacrifice things like entitlements. But that said, the back half of 2013, for the economy, what's the likelihood it's stronger than the first half once we ideally get past these issues, these fiscal issues?
Well, it's a great question, but that's a huge if because we haven't gotten by that. Our debt keeps growing and growing and growing. Now, if that happens and there's no big political bombs out there that we're not aware of and big discussions that last 2 years with no resolution, then people should start to hire people. They've done that for the past 150 years. We're really in a very uncertain time. And the guys in Washington are not making it better by not getting along and making policies early enough so these businesses can really decide what they're going to do.
We just heard from our colleague Charles Payne. In the public sector, cash on the sidelines, tons of revenue being generated overseas. Is the private sector able to enjoy that at all? So much free cash to spend. What's the likelihood now, again, as we're past the election, hopefully past these cliffs in the second half, once again, that money is put to work?
Well, you know, if you're looking at private companies, you really have to look at cash in, cash out. You have to look at margins, profit performance. All those are very positive, Lori, and those have been going up for 4 years. But remember, these businesses are fundamentally different from publicly traded firms. They don't have tons of cash on their balance sheets. They're not sitting on the sidelines at all. Their margins are usually very thin. But that said, you're right. Things are strong, and over the past 100 years, 150 years, when those things are strong for such a long period of time, they go out and hire people, they buy stuff, they buy fixed assets, they want to make more money and do better. And the fact that they haven't is a real big concern. In one of our polls, we've shown that 75% of the people who run these companies are less likely to expand just because of the national debt.
Yeah.
So really, until we get a real handle on that, they're going to be nervous, and I don't blame them.
They've been nervous for a long time, though, Brian. At some point, you got to just do it, hire, spend CapEx, and get business going. Brian Hamilton, we'll talk to you again very soon. Thank you so much.